Hi, this is Prashil, and you're listening to the Equity Master Stock Market Wrap Up. In this week's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. The earnings seasons for the December quarter kicks off, and TCS starts strong. We'll be taking a look at the GST relief for MSMEs by the government. We'll also be examining 2019's first merger between Bandhan Bank and Gruh Finance. And further, we'll be taking a look at the macro events that moved the markets over the week. Now, a quick look at the broader markets. Asian and European share markets were trading muted as the earnings rally paused to await a concrete outcome of the US-China trade war. Back home, Indian indices too ended the week in red amid an uncertain global scenario. With the markets out of the way, let's look at the key stories in focus today. The earnings season is well underway, with the IT sector bellwether TCS kicking off proceedings. The software major reported a 24.1% rise in year-on-year profit at 81.1 billion rupees for the December quarter. Revenue for the quarter rose 21% year-on-year to 373.4 billion rupees. The company stated that it posted a strong revenue growth of 12.1% in the December quarter, which is its highest in 14 quarters. The company also guided for a continued strong growth going forward. Further, the directors of the company declared a third interim dividend for the financial year of 4 rupees per share. The dividend will be paid out on 24 January and 18 January has been fixed as the record date. Moving on to news from the economy, in a major relief to micro, small and medium enterprises, in short referred to as MSMEs, the GST Council doubled the GST exemption limit for companies in the sector to those with an annual turnover of 4 million rupees from the current 2 million rupees. The move to raise the threshold for GST registration is significant considering that small businesses have been hit by the government's demonetization move in November 2016, business disruption in the early days of GST, and a credit squeeze in the recent months. Bringing about major changes in the composition scheme, the current turnover limit was increased to 15 billion rupees from 10 billion rupees. The GST Council also allowed Kerala to levy a calamity cess of 1% on interstate sales for a maximum period of 2 years. Moving on to the first merger of 2019, Bandhan Bank said that Gruh Finance will merge with it in an all-share deal valued at approximately 818 billion rupees. Shareholders of Gruh Finance will get 568 shares of Bandhan Bank for every 1,000 shares held. The transaction helps lower the promoter stake in Bandhan Bank to 61% from 82%. Now, RBI's banking license rules required the promoters of Bandhan Bank, Bandhan Financial Holdings, to lower its stake from 82.3% to 40% within 3 years of starting the business. The central bank had penalized the lender for failing to comply with the guidelines within the stipulated timeline by freezing branch expansion and remuneration of founder and the chief executive of the bank. Moreover, the merger will see HDFC Limited owning close to 15% in Bandhan Bank via its holding in Gruh Finance. Now, the share swap ratio set for the Bandhan Gruh merger ensures that HDFC got itself a sweet deal. According to Tanushree Banerjee, the co-head of research here at Equity Master, mergers and acquisitions are typically evaluated based on synergies of the business and the valuations offered. Here's what she wrote in one of the recent editions of the 5-minute wrap-up. If you haven't read it, it's worth a read. Turns out, Bandhan Bank's acquisition of Gruh Finance is a winner on all counts. Not that the bank has struck a bargain in the share swap ratio, rather, Gruh Finance has been richly valued. But Gruh Finance could help Bandhan Bank become more than a bigger bank. Although HDFC, which is the parent of Gruh Finance, is not directly involved in the deal, it is evident that both HDFC and Bandhan Bank want a bigger share of the rural pie. The exponential growth that rural banking has witnessed over the past few years offers huge scope for expansion, especially for entities with proven credit appraisal history. It will be interesting to see where the merged entity goes from here. Meanwhile, we'll keep you updated on all of the developments from this space. Moving on to macro news from all over the globe. The New Year rally in global equities stalled on Thursday as investors paused to draw breath following the recent rebound as they awaited concrete details on the US-China trade negotiations. Treasuries led a broad advance in bonds as oil fell. Global stocks have rallied since the start of the year amid optimism that tensions are thawing between the US and China on trade, and commentary from the Federal Reserve showed that policymakers have shifted to a more cautious approach to further interest rate increases. Still, concern surrounding the partial government shutdown in the US continues to weigh on sentiment ahead of the earnings season. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Happy investing!